Alright, we are back live, and this is another backtesting session brought to you by Lucas Flores, the trading industry's best mentor. I could be the trading industry's best trader, but that's not really what I want to do. I want to be the trading industry's best trader because I love helping people, and I feel I have a God-given ability to help and teach. So that's what I want to do. That's where I get my fulfillment. So anyways, quick little recap of what's been going on recently. I learned a big lesson about the learning process, about what you have to do in order to become an exceptionally good trader, and that is what I want to do. I want to be an exceptionally good trader so I can show other people how to be an exceptionally good trader. But I wasn't following the process. I wasn't submitting to the process, and that led to a lot of frustration, confusion, anxiety. I felt clueless, and ultimately, I wanted to give up. I mean, I've wanted to give up so many times, but here I am making a YouTube video still about me trading. So there's no way that I'm ever going to quit. It's either I make it as a trader or, I mean, that's it. There's only one option. I can only make it as a trader. That's it. It's my dream. I've poured my heart into these fucking charts, and I'm going to make it work without a doubt. So, went off on a tangent there, but I've been going about the process wrong recently. That led to me being absolutely clueless. ICT started his 2024 mentorship, and I just followed that, and he's laying out a process step by step, and I've just been following it, and now things make a lot of sense. Basically, that's what I want to get at. So, what I learned is just submit to the process and do things the right way, and just be an exceptionally good trader. That's what I want to do. So, I've spent a lot of time on his live streams taking notes, really, really extensive notes, and just watching him frame the narrative around everything. And now I see things a lot clearer. And the first step is understanding where is the market likely to draw to next. And I have a good understanding of how that works. Basically, the market wants to draw to areas where price is smooth, because underneath these levels, see underneath these smooth lows right here, there's going to be sell stops. Any trader who's long off this move right here, they're going to see this level as what? Support. And they put their stop loss under there. So the market wants to attack these areas that are smooth because there is sell side liquidity resting below that level. It wants to attack that. So smart money can be the counterparty to that trade and go long, right? In areas where price is jagged, that is where there's been a feeding frenzy. That's where the stops are ran. And then where price is jagged, that's how I know the damage has been done, so the market's going to seek opposing liquidity. So I'm basically using that easy logic, easy narrative, and I'm also using new day opening gaps, new week opening gaps, because those are where I think, I don't know if this is for certain, but that's where I think dark pool transactions take place after hours. That is something to look into, something to study for another day. But I think that is what ICT was hinting at in his live stream when he said these levels are pooling price, dark pool, pooling price. So I think that's what might be going on at these levels. And that's why they're so powerful, because they provide a vehicle entry for those people with deep ass pockets. So that's why these levels are powerful. So it's just using smooth levels and new week opening gaps and new day opening gaps. Also having something to refer to on the daily chart and the weekly chart as well. That as well. So step number one is understanding where is the market likely to draw next. And I just outlined what I used to determine that. So right here we have this start of the New York session. And if there's a cluster of new day opening gaps and new week gaps below the marketplace, that's where the market is likely to draw to. But if it's above the marketplace, that's where the market is likely to draw to. So if you look at the state of this market right now on a 15-minute chart, this is smooth and this is smooth. So price can attack either level. We have to consider, where are the new day opening gaps? Well, right now we're trading inside this new week opening gap. So what could potentially happen is, let's see, do we have one from yesterday's session? I don't think I marked yesterday's. Okay, it's right here. So we have this fresh new day opening gap above the marketplace that hasn't even been used yet. So that's going to be a strong draw on liquidity. Not only that, but we have this new week opening gap. So what could happen, price could run this level right here, it's smooth, or the London low, and then begin to fade higher towards this. That is what I would be potentially looking for. So I want to see relative equal lows form, which we already have on the higher time frame. I want to see the market run that and then begin fading the other direction. And that would be my draw on liquidity. Dropping down to a 5 minute, we have those smooth lows. But really, I'm waiting for these smooth levels to form after 7 o'clock in the morning. 7 o'clock in the morning starts the New York morning session. And what are we doing? We traded right up to that new day opening gap. Looks like we rejected the upper quadrant of that. So the draw on liquidity was correct. I just never saw anything to get me in alignment with that move. So, but that's good because I know where the market is likely to go next, and that is the first step. So if I can master that, then I go into the next step, right? Now you can have a bias for the day, you can have a bias for each hour, you can have a bias for each session. It doesn't have to be one bias. I could trade this hourly range in itself while still maintaining a bias that maybe is opposed to the bias that I hold for the daily session. Like for this hour, I could be bullish, but for the day, I could be bearish. But basically, I'm studying where is price smooth, right? Right here, we have clean highs right here, right? We're forming clean lows here. I haven't checked if there's news on this day. Oops. We're running these clean lows. Looks like we're taking that 7 o'clock low right here. So we traded up to that new day opening gap, rejected it, and now we're fading lower off of that gap. Price is smooth here, here, and these could be areas that could potentially be a draw on liquidity, and there is news. So always got to look for that. What kind of news? Wednesday the 15th. And it was core retail sales. Okay. So really, I'm not even trying to take a trade. I'm just studying where is the market likely to gravitate to next. And you can see, what do we have right now? Did the market run out those London lows? Not quite, but we did run out these lows. And we referred back to this order block. And it is kind of noisy right here. We have a low, a high, a low, where we have a high, low, higher, high, lower, low. That would be a bearish breaker. What's going on in the higher time frame? If this buy side imbalance, we have this wick. Let's see. Pretty insignificant. Trying to figure out where is the algorithm referring back to when it reaches down into this level and starts to trade higher. We have this wick right here in this swing. So we're coming off the consequent encroachment of this discount wick right here. So price is jagged down here, so what's it going to do? It's going to go to an area where it's smooth. So because price is jagged down here, we know that the work has been done. We know that the sell stops under these lows have been taken. So now the market's going to seek an area where it's smooth. The sharks have had a feeding frenzy. The work is done. The damage is done. Okay, now we're going to go seek the next area where the damage has not been done, where it's still smooth. And that would be above these relative equal highs. You can see we're still pressing higher into these relative equal highs. So we have a stop run, all these relative equal highs. That is made jagged. And now what are we doing? Since we ran out the buy side liquidity above these highs, the market is now seeing a retracement. We have a change in the state of delivery. We have a breaker formation down here. Let me go to 5 minute. Whoops. This high is primed, right? Because we came just shy of it, turned away. Everybody who's short off this high gets a sigh of relief. A sympathetic sigh of relief. So I would want to see this act as support. We have an order block. I want to see the mean threshold respected. We have a buy side imbalance. Now this could just get absolutely ran over. Let's see. Looks like it's gonna get ran over. See, and that's why I'm just studying price. I'm not taking any trades because I'm gonna be wrong 90% of the time because I'm learning. But we have the high impact news, and this action is sideways, not directional at all. But this was a good setup that I would probably take most of the time, knowing that we have these highs left intact, right? We have our end dog above the marketplace, but it just didn't work out. That would just be a loss. We respect the consequent encroachment this wick, and we get sent higher. So I think most of the time what I would be doing is waiting for the 9:30 open. I think 9:30 to 10 o'clock would be my time of day to trade, because this happens all the time, where I have a good setup, but then 9:30 open just fucks everything up. And this would totally be a losing day. No. This action's fucking disgusting. So look at that. So this would probably be a day where I've got to recognize these conditions where it's just literally just sideways. I mean, what are you doing in here? Nothing. It's seek and destroy conditions. You're getting chopped up 100%. But it isn't until we run the overnight low we start seeing a real move of the day. So I'd go back and study what happened. What was the catalyst there? Did I have an SMT? Would that be a good confirmation? Did I have an SMT? Fuck no, I didn't. This would just be a day where I got slapped around and lost 100%. Especially with the stage that I'm at right now, where I don't understand everything. I'm just trying to figure out where's the market likely to gravitate to next. Notice how the new day opening gaps are supporting price though this entire time. Look how the bodies of the candles, for the most part, stay within the new day opening gap. Color outside the lines a little bit, but not much. This would be a losing trade, which I thought was a good setup, but we kind of already reached into that objective before we traded back down here. So this would be, I mean, there's a lot of things converging in this one area as well, a lot of PD arrays. Just didn't work. And what are you gonna do? You're gonna throw everything away because you have one losing trade? No. So it's a very sloppy morning session. Probably wouldn't walk out of this day alive. I just have to take one losing trade and be content with that. Just walk away. This action's not good. Up, down, up, down, up, down, up, down. Okay, let's go. But we can study what we did. See how we primed this high? We still reached right back into that. So again, I got my directional bias correct, so that's good. But it just didn't play out, which is fine. Which is totally fine. Let's see. Stops right there, turned on a dime. Look at that, how the body respects that. So that's perfect. So maybe in the moment, if I caught this, I could have taken this trade, but probably not. We have our order block. We have this inversion wick, maybe. We have this IFVG, but I don't really see a stop run down here, except maybe a run on this low right here. So maybe this would be my breaker, maybe. Right. We have a low, a high, a lower low, and a higher high breaker. And I could target a run into that high. But I don't know where the fuck I would get my entry. I think, because this is our low, this is our short-term low, we have a minor pool of sell-side liquidity. We have our stop run. I think once I have a close above these candles, I have a confirmed change in the state of delivery. The market's now going to enter a buy program and seek the buy-side liquidity above these highs. And then I want to hunt an entry. We can see that we color outside the lines here because we have this large wick, discount wick. But we fail to reach the consequent encroachment of that, so that's a sign of strength. And we're also tapping into the open price of an order block. So there you go. Now I'm thinking. Now I'm using my fucking brain. So I could trade off the fact that we fail to reach consequent encroachment of this wick. We have a breaker formation. And this would also be inside of the breaker. Like that. And we also have an inversion fair value gap, which is disrespected, so. We also have this, doesn't touch it. We've got this. There we go. So PD arrays do not go stale. You can reuse them. And if we look further left, we have this. And if we look further, no, I'm just kidding. So we have a lot of things converging in this one area. So I could get my entry, if I'm being fancy, on the open price of the order block with a stop loss at mean threshold right here. And now there's a shit ton of my lines on the chart. And there we go, risking what? 9 handles to make 54. I'll target this high down here. Right there. Can use this price leg like a projection. Or maybe even, oh, wrong thing. This? No. -1 standard deviation. So what I've noticed for my trade model, what I think it's gonna be, is I want to see number one, a change in the state of delivery. Number two, a breaker formation. If I have an order block or an inversion fair value gap or a buy side imbalance that aligns with the breaker, it overlaps with it, meaning it's inside of it, like we have here, then that is the trade that I want to take. Like here we have our breaker formation, and we have an order block inside of the breaker, so that would be my entry right there. And that's basically it. And this video is already 20 minutes long, and I'm sure nobody's going to watch it anyways, but I don't want it to be, or should I keep going? Yeah, I'm end there. Okay. So there's a bunch of fucking noise on this one. Okay. Let me go back up to a higher time frame. Initially, I thought that there was no opportunity in this chop, but my bias was I was simply looking for a run to this high. Why? Because we primed it. We traded higher, came just up close to it, and then we faded lower. So that creates a sympathetic sigh. Everybody's short at this high. The short positions at this high, they go, oh, that was close. Right? And now, any new shorts off of this high, off of this price leg right here, where are they going to put their stops? Well, they see tough resistance here or here, and the algorithm attacks it. Once we have a change, a confirmed change in the state of delivery after running a minor sell side liquidity pool after coming off of, showing willingness to move off of this new day opening gap. And that is a good 50 handle run, which is all I need. I just need to be able to do that consistently, and this shows the formation that I'm looking for, where I have a breaker formation, a change in the state of delivery, and I want to see my PD arrays overlap with that breaker formation, and I'll also look to the left side of the curve and see, does anything converge in this area? Is there a strong reason for the market to refer back here? And that is where I'll get my trade. So easier to outline in hindsight. Eventually I have to get to the point where I can do it in real time, which I will, which I'm probably going to practice doing tomorrow, watching candles paint live, because I think I have a pretty good understanding of where the market's going next. And I'm just doing things step by step, submitting to the process and doing things the right way, so I can become an exceptionally good trader, so that I can show other people how to be an exceptionally good trader. And that is it for this video. Till tomorrow.